Hey everybody, today is Friday, December 2nd, 2011. This is Brian Shannon speaking from Alphatrends. Let's take a look at this market here. We had a huge up market this week. Percentage-wise, the S&P 500 was up 7%. The Russell 2000 up 10.3%. Financials close to 10%. So huge rally this week. It's interesting that year to date we're still down in most of these markets. Financials still down 20%, 19% here despite a 10% rally. So it's not as easy as it might appear based on headlines. In fact, this week we saw two very large gaps that accounted for the majority of the gains, and another gap in here higher today. So and we gapped higher on Tuesday, I guess, as well. But the gaps accounted for a lot of it, and you had to be taking a lot of risk to take advantage of at least of this gain on Monday, because as you know, we had been in a downtrend, and we're looking at a 10-minute time frame of the last 10 days, by the way. We had been in a pretty established downtrend and closed right on those lows that 1 week ago today. That big gap up made it difficult to participate unless you purchased on Friday, and to me that's not what our job is, which is to manage risk. It would seem to be taking too much risk. And then with a daily chart looking as bad as it was and just being underneath that 50-day moving average at the close on Tuesday, I didn't think it made sense to really be long overnight there either. But sure enough, we got another huge gap higher. So it's easy to feel left out, as I was saying, in this type of market. But our job is to manage risk. And again, take a look at this year-to-date column. We're still down 0.7% year to date in the S&P 500. We've had just a tremendous amount of volatility this year. In fact, it's kind of interesting when you take a look at it since January 1st. What we're going to do is draw a volume weighted average price line. And what's wrong with my mouse? Here we go. If we take that volume weighted average price and start it right over there at January 1st, look where we closed today, right on that line. It's basically right about 125 has been the average price that the S&P 500 has traded at this year. And as you can see as well, it was a prior important support area that had broken, and really more this level right here at the what was today's high, about 126.44 was the or 126.50 was the official high today. We actually got up to about, I think, 126.83 pre-market, and that's important because the 200-day moving average, you can see at the bottom left corner, is at 126.68. So we did get up through that 200-day moving average, and our job as traders, again, is risk reward and managing that risk. And we always want to ask ourselves a couple questions. Where has it come from? Where does it have the potential to likely go? Where does it have the potential to go before it's likely to encounter some resistance? And after what was nearly a 10% rally, coming into the 200-day moving average seemed like maybe another potential resistance level. We've been keeping an eye on some of these other we've been keeping an eye on some of these other levels, like this trend line here that was the basis. If you go back and remember that symmetrical triangle that we were talking about, and we'd broken that a couple weeks ago. Well, we got up to kind of the apex point of that, and sold off a little bit in here today. So when we back it up just a little bit now to a 30-minute time frame, you can see where we are is short of this prior important level, and just a little bit of resistance that we had seen back in mid-November as well. But on back to that 10-minute time frame, we have a pattern of higher highs and higher lows here. It's obviously quite extended. We're at a declining 200-day moving average after a big rally, so I think we want to see this market hopefully settle in a little bit next week. And if you take a look at the volume weighted average price for this week, which would be just taking it from here on over, we can see it actually lines up perfectly with that 5-day moving average. Now, both of these numbers are going to change obviously next week as this 5-day moving average turns into a 6-day moving average, basically, if we want to count for since this move began, and the volume weighted average price will move as well. So we'll monitor the 5-day moving average next week and that volume weighted average price since the event, and I think that that's going to prove to be an important level that this market holds on to. So Digestion of these gains seems like the likely course for this market. Now, last Friday, it seemed like we were going to maybe turn sideways and establish some support, and then a little bit of a rally is what I was thinking. But obviously you have to be prepared for anything, and you have to have a go-to list of stocks for the long and short side, because things just change so darn quickly in this market that they can leave you, flat-footed, looking for, wondering what the heck happened and why you're missing out and not finding any opportunities at all in this market. The Nasdaq, for its part, was up massively as well. We can see here on the table that it was up 7% this week, and it is up 4% year to date. So obviously doing a little bit better than the S&P 500. We've known that for a while, but look at this daily chart. It's just a choppy mess. It's not easy at all, regardless of what anyone might tell you. What we have here is the 200, I'm sorry, the volume weighted average price since the beginning of the year, and that kind of lines up down in there with about that 50 and the 150 day, or the 50 and the 150 day moving average. So and obviously that level of 56 that we've been keeping a close eye on. So when we back it up here, or drill down a little bit, I suppose, because we're in a daily time frame, to the 30 minute. I've got a 65-minute chart. I'm talking too fast here on this. We knew that 56 was an important level. We've been keeping an eye on that. The market kind of halted there a little bit, I believe, on Wednesday, and then was able to push up through it. But we've got this little downtrend line that maybe was touched. I mean, you can look at that. Here's the next potential level of resistance up at about 58.5. We had touched this prior support in here today, almost perfectly lined up with that trend line. So 57 in 35 cents or so is where we see a little bit of resistance forming. A pullback down to 56 would be not a bad thing, I think, here. And if we take a look at the volume weighted average price since the event, you can see that we'll draw that across, and that volume weighted average price is currently at about 55.70. So that will rise up as prices do as well, and we get rid of the data from here. But I'm sorry, that's what the moving average will do. But this 5-day moving average, we'll see how it comes together with that 56 level, perhaps early next week, and see where it goes from there. The Russell 2000 obviously also had another big week, and this is the market that last week, if you recall, what we were looking at was we were looking at some Fibonacci levels, and those levels were taking the highs from October to the November low, I'm sorry, from the October range, basically. What we were looking at was this Fibonacci here, and we were saying from the lows of October to the highs of October, the market, the Russell 2000, stopped right on that 61.8% retracement. And I made a point last Friday to say I don't think it's a good reason to buy a market in not a good place, as we were closing right on the lows and looking terrible. Well, hindsight being perfect, I mean, I wish I had loaded up in there. And same story in here. We had some sideways action on Tuesday, and then the big gap higher. So it was difficult to take it. If you look at the how much of this week's gains came from gaps, actually, it'll show you that you basically had to be invested in what was looking like a very sick market to take big advantage of this. Now we have a little bit more neutrality, more of a neutral look to this market. Let's take a look at the volume weighted average price year to date in here. I think we're I would guess well below it, and we are. It's up at about $76 a share, and we've got that declining 150-day moving average. So we're still below these longer-term moving averages, which are declining in all these markets. And again, that's the case for the S&P 500 as well, that we're below that declining 200-day moving average, but we're getting more tests of it, at least in there. The Russell still, I mean, you get it back above this this VWAP and the prior bigger support level, which is still, I guess, possible by year end. But we've got about, I think, 21 trading days left. This is a big band of potential resistance right up in here between that 76 to 77 level, basically up to declining 200-day moving average. So a lot of people are looking for this. Well, it's actually, you'll get half of the people are saying this is a great fade. It's going to go back to the lows. The other half of the people are saying this is it. This is the beginning of the big rally, and we're going to push past 77. Listen to price action, because price action is confusing enough without listening to all the headlines and all the different interpretations of the headlines. Price is the final judge, and price is saying that no one has confidence here. That last week it was bearish. This week we were tremendously bullish, and we're back to basically where we started 2 weeks ago. So again, it's more difficult than it may appear to the untrained eye. 30.5 has been a big level we've been keeping an eye on for the semiconductors, and I didn't draw that properly, but that's about where that level is. Let's take a look at the 65-minute time frame, because it's easier to see in there. Here's $30.50 basically, and we're still holding above that for now. I wouldn't be surprised to see us dip down a little bit below it next week, as we have maybe a test of the volume weighted average price since the event. And again, that's something to keep a close eye on. It's at 30 now. It should rise up, obviously, and the 5-day moving average is rising up as well. Just by trading any shares up in here is going to lift that volume weighted average price as the average price gets a little bit higher up in here. So let's keep an eye on about 30. Really, I think 30, down below 30.5 might get some attention, maybe a little shakeout, and then push back up would be the more bullish scenario for the semiconductors. Year to date, let's take a look at that volume weighted average price, because we're below that as well, and you can see how it early on in the year acted as support, the volume weighted average price, and then here we are acting as resistance right near that declining 200-day moving average as well. So we've still got, I think the technical term is a big effing mess on these charts, and that's the way it is. You got to keep it to the shorter term time frames with smaller share size, and that's not always an easy game. So don't be sucked into thinking it's as easy as some people might be making it seem, or the talk is out there. The financials still clearly in a downtrend, and their volume weighted average price year to date, I mean, we're down 20% year to date in here. Excuse me, the volume weighted average price year to date is up near that trend line, up near this prior little resistance that we had seen form on that little spike high about a month ago. When we take a look at the 65-minute time frame, we've known that the $12.80 level was a big level. That's where last week's sell-off began, is when the financials, a week and a half ago, when the financials dropped below that 12.80, then we had the lower highs and lower lows. Well, in here this week we did get back above that 12.80 level, so it would be nice to see it hold above that to make it seem as though this market would maybe still have some time consolidation, and that's I guess I still stand by that. We had a big rally this week, but we're not bullish, these markets. We still need time to work all this weakness off and build a solid base and develop some good setups. The clean setups that we're looking for aren't always there when you get the gaps like this. The financials average price this week was about 1260, so a little pullback below that 1280 level would probably get some attention, but I don't think it's going to necessarily crush this budding momentum into a bullish seasonal time of year. That is the end of the the last month of the year is generally bullish, but you can't go on general tendencies and that sort of thing. You have to look at the one thing only, which is price. That is the only thing that pays us, which is price. That's going to do it for me. It's been a long week. Hope you had a good one, and thanks for tuning in.